There are many ways to use the Bollinger Band, and this Bollinger Band is very much accurate if used in the correct way. Different traders use the Bollinger Band for different purposes. In this video, I'll be showing you exactly how you can get the most accurate buy and sell signal using the Bollinger Band to trade gold. And this is also applicable when it comes to trading assets, but this must be used in the right time and must be used correctly. Looking at my chart, the green line you are seeing, this is the Bollinger Band, the upper Bollinger Band, the middle Bollinger Band, and the lower Bollinger Band. This Bollinger Band is a special setting of Bollinger Band. The period is 130 and the deviation is 2.0. So just as you can see, here is the setting of the Bollinger Band. The period is 130, deviation is 2.0, the shift is 0, you apply it to close. And if you've done that, this is how your Bollinger Band will look like. Then on my indicator window, we are having a Bollinger Band as well. This blue indicator you are seeing, this is the upper band and this is the lower band. So this is a Bollinger Band of the TDI indicator. And here is the setting. The first is the relative strength index. The period is 13. You apply it to close. Here are the levels, 32.50 and 68. The second is moving average. The period is 2. The shift is 0. Method is simple. You apply to previous indicator data. Ensure you use the same color, everything just like mine. They will have the moving average, the period is 7, the shift is 0, the method is simple, and you apply it to previous indicator data. They will have our Bollinger Band, the period is 34, the deviation is 1.619, shift is 0, it is applied to first indicator data, and we'll have another Bollinger Band, our moving average, the period is 34, the shift is 0, the method is simple, and you apply it to first indicator data. So if you've done that, your indicator window will be looking exactly like mine. So what is the concept of the Bollinger Band? You must know that price oftentimes is meant to stay and function within the range of the Bollinger Band. What that implies is price will not stay too long outside of the Bollinger Band. And the idea behind this is just like a typical water body. A fish or a shark could not survive for too long outside of the river, outside of the water. So the highest a shark or a fish will do is to step out by the river bank a little and then return back into the river. So we are seeing this Bollinger Band as a water body which the fish can hang around. So our price tend to behave like the fish. So this price can hang around the upper Bollinger Band, hang around the lower Bollinger Band. So the idea is once price hang around a little, price pushes to the zone of the upper Bollinger Band, there is a high tendency of price returning back inside of the band. And price come into the band, it's either from the upper Bollinger Band, it comes to the lower Bollinger Band, to the middle Bollinger Band and continue to the upside, or break through the middle Bollinger Band, move to the lower Bollinger Band, bounce on the lower Bollinger Band and move back in that direction. And that is why if you look typically at your TDI indicator, the blue line which serves as our water body, which is same as the Bollinger Band, they will have this green line. The green indicator you are seeing here is what we regard to as the price line. So it is the same price behavior on the main chart that is being replicated on the indicator window using the green moving average. Then we'll have the red moving average. The red indicator you are seeing is our entry signal. This indicator is what we use to confirm and validate our entry. Then the gold color you are seeing here help us to determine the trend of the market. So having established all of this, how exactly then can we make entry? This is very effective if only you use it correctly. So the first thing we do is for us to determine the trend. Remember, the trend is always your friend, and every trading decision is built based on knowing what the trend of the market is. If it is a bullish trend, which is an uptrend, it means you are to buy. If it is a downtrend, it means you are to sell. And if it is a ranging market, obviously you know what to do. You kindly stay out of the market. So this Bollinger Band is what we are looking at. So let's proceed to determine our trend. So we can move to our 4-hour time frame to determine what the trend of the market is. So obviously price is in an uptrend. And if you look at this carefully, you will realize that this is a typical uptrend. So price move from here to give us a higher low, higher high, right? Higher low, higher high, higher low, higher high, higher low. And then it keep on going on and on, higher high, higher low. And presently, this is where we are. So we have stated this before now, that one of the things we do is for us to to identify our point of interest. So which is very, very key to whatever we do, knowing what our point of interest is as far as price movement is concerned. So in all of this here, we have a typical price movement. And for instance here, this is our smart money cube from this zone. That is a smart money cube, and of course look at what happened. Price went up, returned back into the smart money cube and pushed to the upside. So now let's look at how we can make this entry on, look at 1-hour time frame. Now you can see the smart money cube we marked from our higher time frame, the 4-hour time frame. This is the smart money cube on a 1-hour time frame. Now how do we bring this into use, and how effectively will this work? If you look at this, price already pulled out of the Bollinger Band. You can see that price pulled out of the Bollinger Band, and we've established that price cannot survive out of the Bollinger Band for a long time. So this price pull out of the Bollinger Band, which is the first thing we want to see. Now we are considering entry. So price pull out of the Bollinger Band, and afterwards price pull back into the Bollinger Band. And when price pull back into the Bollinger Band, we come to our indicator window. We want to see, for us to make our buy entry on the 1-hour time frame, we want to get what we call a shark fin. So in this shark fin pattern, we see our price line of the TDI break out of the Bollinger Band on the indicator window, and you can see that obviously here. Immediately we get this breakout from our TDI line. You can see it outside here, and now it returned back. So I'm referring to what happens here. And afterwards, look at how it returned back into it. Remember, we say it's serving as a fish outside the water. And since it cannot survive, it will not be out for a long time. And immediately it returned back inside. And when it returned back inside the band, there is a cross between the price line, the green line, and the signal line, which is the red indicator. Immediately after that cross, we look at here, we have a price action, right? So you can see those bullish candles that give us a price action. Then you make your buy entry and you have your stop loss here. and you can see how that plays out. Let's look at 15 minutes. On the 15 minutes, we want to see price retest either coming from the middle Bollinger Band or the lower Bollinger Band. So let's look at 15 minutes and see exactly how it plays out beautifully well. So you can see exactly how this works. So on our 15-minute time frame, this is the price pullback. So what happened? This price pulled back all the way to our middle Bollinger Band. But before then, you can see that it pierces outside of the Bollinger Band and then returns inside. But we are not selling, we are not countering, neither are we doing overbought nor oversold. So we will use the middle Bollinger Band for additional entry confirmation depending on the trend, and the lower Bollinger Band majorly is for a buy entry. Okay, we will buy using the lower Bollinger Band as additional confirmation and then sell using the upper Bollinger Band as additional confirmation. But this must be in line with the existing trend of the market. So now you can see this pullback, price pullback into this middle Bollinger Band, and here of course we have this pin bar candle formation. Look at our price pull out of the lower Bollinger Band of our indicator window, giving us that shark fin pattern, remember, as we stated earlier, and it returned inside. So we have that cross between the price line and the signal line, and you see that push all the way to the upside. So this is very much effective, and you can see how that plays out. Again, how do we confirm this entry? Here we have another one. You can as well use your trend line to do this. You see that is our 15-minute time frame. We have that pullback, and look at this price pull out of here, and this is our engulfing candlestick pattern, and you have that buy entry on a 15-minute time frame, having established the trend of the market. Remember, the trend is always the first thing to consider as far as this strategy is concerned. You can see this, and look at this. Before this, we already know the trend. So price pull back to the middle Bollinger Band on a 15-minute time frame. We already know what is going to happen, and then we have this as additional confirmation, this price action, and you can see that price movement all the way to the upside. Again, we have this one here. You can see this. If you look at this carefully, this is a divergence. These are equal low, and look at our indicator window. The price action is giving us a divergence on our TDI, and of course you should have bought here earlier, and because there is a divergence even all the way to this bottom, you can see this, you can see all of this, all these are equal low. The lows are of the same, and already we know what the trend of the market is. You can see that, and here is our divergence. Price is making lows, but the indicator window is going higher. So you see that is our divergence, and we have this entry, and then price continue back to its original direction. Remember, we already determined the trend of this market. So here it's another one, and then this is how we find our entry. So there are situations where it pulls to the lower Bollinger Band beautifully well. Look at this scenario, price pull to the lower Bollinger Band, and then look at this, and we have our buy entry. But this already, we must first of all determine what is our trend. We must determine what is our trend. You can go on to mark your point of interest. Let me show you something. This is an order block, right? This is another block, can see this. All of these are happening in a correct point of interest. Look at this now. None of this is being traded in isolation. Price has been coming down. This is 1 hour break of structure because we're having lower high, lower low, lower high, and then lower low. Then we had this break of structure. So automatically we have this other block. And afterward, price now gave us higher low, higher high, higher low, higher high. So, and then you see these two now, higher high, right? Sorry, higher low, and again, higher high, higher low, higher high. So if you follow all of this, you realize that here you have another other block. Do you see that? And again, we are having another other block here, which led why this particular trade plays out. Here we have another other block, another higher high. So you can go on and on to mark out all of this and see exactly how this plays out. So this is simple, and I want you to back test it. Apply it in the right price concept and you will be amazed at what your result will be. Thank you for watching, and if you are yet to subscribe to the channel, please go ahead to subscribe. Turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.